Hey everyone, I'm Mark Goucher. Welcome to another video of Simplicity Investment Watch. Today is Wednesday, December 25th. Merry Christmas, everyone. We are in a half-time break for the markets this week, with action to resume tomorrow for 2 days of trading. I have several updates to my bull and bear list. My action list, basically, including a few ads that I took off of my watch list and I moved them onto the action list, and I'll go over those in just a moment. But before we get into the major market action for today, first our disclosure. We do not give financial advice, and this information is not for investment decisions. This is for educational purposes. The stock market is risky, and any trade or investment is expected to have some or total loss. The use of derivatives increases investment risk or potential loss. Do your own research before any trade. Please consult a financial advisor or professional to determine what is a suitable investment profile for you, given your investment goals and objectives. All right, for the major markets, first we have SPY, ETF for the S&P 500. So the Fed decision was right here on the chart, 12/18 last Wednesday. The Fed dropped rates as expected. However, the commentary afterwards was to the effect of there's an expectation that the rates are going to remain higher for longer. So instead of maybe 4 rate drops next year, there's only 2 in the for those best guess scenario, or however they want to project it. But in any case, so it spooked the markets, and there was obviously, if anybody following the market saw it, there was a significant drop across all the majors and across most of your holdings, probably in your individual portfolios. The good news out of this is it immediately bounced back. So this dash line here is the 50-day moving average. It came down through the 50-day moving average. This is the Ichimoku cloud, and the day following, so on Thursday, the market tried to fight back. The SPY did, and it hit the 50-day moving average, and it found resistance. So what oftentimes is previous support can become resistance. But then on Friday, it was a strong day. This is a very strong volume candle. By Friday, the mood had changed, and it bounced off the cloud, found support at the cloud, great, and moved and closed up above the 50-day moving average. And actually, during the day, it had quite a bit above the average, but then it got pushed back a little bit. And then finally, their last 2 candles on Monday, Tuesday. This candle on Monday is a nice candle where the wicks on the bottom, the shadows on the bottom. That's good. And then Tuesday was a short day for trading. Market closed at 1. So you can't put a lot into the volume on that day because obviously there's less time, so there's less volume. Well, in most instances, all things being equal. So, but all that said, this comeback is nice, and this is my anchored VWAP off of the high from what day? December 4th, and Tuesday's action. Buyers were back in charge if you work off of that anchored VWAP. So good action on SPY. SPY's coming back. I do want to see a follow through day for Thursday, Friday, and we are quite frankly heading into what is the Santa Claus rally period. So it's the last 5 trading days of 2024, and the first 2 trading days of 2025 will be the Santa Claus rally period. It's usually historically that period. Santa Claus rally is worth, I forget exactly what the number was, maybe 1.2%, 120 bips, give or take a little on average. But if it doesn't, it's looking like it's going to happen. The market's coming roaring back, and we'll see. I want to see a follow through day on this one. All right, so for QQQ, the ETF for the NASDAQ, last week, just before my last video, during my last video last Tuesday. Sorry, the Feds was this. So Tuesday was this candle right here, and I was talking prior to this decision with the Fed, which was this long day downward. And what I had mentioned, see if I can hide this VWAP. Nope, turn that back on. Hide this one. Yes, what I had mentioned was this pattern right here is a Harami. Basically, it could be the signal for a market top. If this down candle is totally encased by this up candle from the day before, it's basically called a pregnant candle or a pregnant candle pattern, two of them together. And I mean, it's yet to be seen if this is a long-term downtrend, but basically we did have 2 days down. But the Nasdaq, just like the S&P, found support on Friday. The wick was at the top, so it did push higher, and then it was pushed back a little, but it still closed up. And then we've had a couple of fall-through days, so all good there. And then finally, DIA, the Dow Jones ETF for the Dow Jones Industrial. I mentioned this last week in the video that these long series of losses for the Dow, and then the Fed decision just pushing this down. Found support in the cloud here in the Ichimoku cloud, and this is somewhat of what's known as an engulfing pattern. When you have this action for this candle totally within the body of this one, and the close was up from the day before, but the action during the entire day was down. So this one being up strong for Friday, forming this engulfing pattern, which is an encouraging pattern. Engulfing pattern in this manner is to show that maybe we hit the bottom, and sure enough, well, at least two follow-through days have shown that. The Dow has obviously been beat up the most amongst the ones I talk about here, the top three, and I have an anchored VWAP off the most recent high, so there is a little ways to go before it's shown to me that buyers, at least on the Dow, that buyers are back in control on this. So it's something to watch out for. And basically on all of these, as the markets are coming back, and it does look encouraging, but you just need to be careful about positions that you go into if the macro environment is not positive. So it's just a note of caution. You may want to take a little extra skeptical look at what you're looking at, and weigh your opinions with the major markets in mind, and just have some pay respect to that. All right, for the major economic news that's coming out for the balance of this week, which is basically Thursday, Friday, 2 more trading days. What I have up here is the economic news, courtesy of the website forexfactory.com, so give them credit, forexfactory.com. So what we have that is the only thing that's really worth anything notable for the balance of the week is Thursday, tomorrow morning, 8:30 a.m., the unemployment claims come out. That could be a market mover. You can see right here the forecast is for 223K. The previous report from the week before was 220K. So anything that deviates sharply, either up or down from that, could be market moving. And that's really it for the balance of this week. That's really notable to watch for. All right, now the updates to my action list. So this one right here, this first one is just all the ones that I have a bullish strategy on, or they're on the list as bullish picks rather than bearish picks. So I'm looking at these as being in an uptrend or strong possibility of moving up, if not now, soon. I have changes here that are notable. Affirm Holdings. That is a change. That was a buy last week when I reported or put my video up. This week, because of the recent action, and a lot of these holds are basically because of the overall market action where everything was pushed down. So now, if you're in a firm, that's fine, and that's the same case with any of these ones that I move to hold. If you're in them, I'm not saying sell. I'm just saying that, if you haven't gotten into them, don't go into them right now. You got to wait for your moment, and I'll show that in some of the charts what we're waiting for. But if you're in a firm, and I know one follower who is at least one, maybe two, but regardless, that there's now and maybe they were in at a higher price. I think the price last week was closer to 70, 71, $72, somewhere in that range. So now we're looking at close on Tuesday, short market day, but close on Tuesday was $65. So they're down. They're down a little bit on this, but that's fine. I mean, if they sold a call against it, they were long the position. They did the covered call. They sold the call against it. They made their money on that. Great. And now they get to do it all over again. So if you're, and I'm not saying sell it. So if you're in this, stay in it. And if you're in it for the covered call strategy, go ahead and sell your next call. You're just going to want to sell that call at either your break-even point. Now remember, your break-even is going to be adjusted from what you actually bought it at, and then you can subtract out the premium that you receive for it if for any calls you might have sold and that you were paid on, right? And so you can just subtract that from your cost basis, so to speak, or your break-even point. And now you're looking at selling your next call at least at that break-even or a little higher. But you can just sell your next call against it. Carvana was one that I just added that to the list last week. I added it as a buy, and then because of the following day, the market action just dragged everything down, and I put Carvana on hold. If you went into it, again, fine. But don't. Right now, I'm advocating that you don't necessarily, if you're not in it yet, don't take a new position. Chewy was a buy before it stayed a buy. Dash was a hold before it stayed stayed hold. Palo Alto, that was a buy last week, and now I got it on hold. PayPal was a hold, stay hold. Robinhood was a buy, stay buy, excuse me. Shopify was a hold, stay hold. This one I just added, TSM, Taiwan Semiconductor. It was on one of my watch list, and it finally met the criteria on the charts, which I can show you right after this. Is that I added it to the buy list, so you can go ahead and take a bullish strategy against that, such as a covered call, or going long the call, or going long the stock, or uh, uh, a vertical, bull put spread or something. Just various strategies, but any bullish strategy. Um, Kroger, that was a hold, stays a hold. Disney was a hold, stays a hold. UAL, that's another new ad, came off one of the watch list. It finally met some criteria on the chart activity where I'm comfortable with it now to go into it. So UAL is a new ad as of the 24th, yesterday's market close. And then Vertiv Holdings, VRT, and VST, Vistra, both were holds before and they remain holds. On the bear strategy side, and as I explained in last week's video, I'm now separating these two just to eliminate any confusion. So these three stocks are basically ones that you would implement a bearish strategy. I think they're going down. They are in a downtrend, or they're about to go down further, hopefully, if I'm right, because you can make money on that. Buying puts, shorting the stock, other types of strategies where do a bear call vertical spread, things of that nature. So these are bearish. Abercrombie and Finch I do have on hold. Do not action that. Do not implement that bear strategy against it unless you already are in it or you've already implemented a strategy. Just continue with it, but don't start new if from today. Celsius Holdings, that was a hold last week. I moved it to action, meaning you can implement a bearish strategy against it. It's good to go. It finally met the criteria on the charts. And then First Solar I added last week. and it remains action on the bearish. So implement a bearish strategy against First Solar if it suits you. Okay, and so then as I typically do, I'll take this. These are the covered call considerations for the stocks that are on my buy list that are active buys on the bullish strategy. So let's just deal with the bullish strategy ones. So these are the ones that are green, good to go. They're not on hold, and I plug them into my covered call filter, looking for certain criteria as I'm doing this. And this is my list. So Taiwan Semiconductor, I just talked about that. I just added it. It's a $206 stock. If you wanted to do a covered call, you got to buy 100 shares of that. So you're talking $21,000, give or take, just ballpark it. And then I first ran the filter for expirations that are for this Friday, the 19th. No, sorry, not. I'm looking at the. I already got my 2025 calendar up. This Friday, the 27th. There was basically few or any value in those. And that stands to reason there's only 2 more trading days left. So I pushed out to January 3rd, so basically a week from this Friday. And then there's a little bit of value. And then to kind of get ahead to the next one, I went out 1 more week, and I'll show you that one. Obviously, there's more value there. But if you just want to go till the 3rd, a week from this Friday, you can go in with buy 100 shares of Taiwan Semiconductor, sell the call that expires on January 3rd, sell the strike price of 217.50, and you can get 73 cents times 100 because that's what options are in groups of 100. So that's $73 for that contract. The return on just what you get paid for selling the contract while you own the shares, the return is 0.40%. So 40 bips, not bad for 5, 6, 7. Take New Year's Day out of there, so 6 days of market action. And one of 3 things can happen. Taiwan Semiconductor can go down, Taiwan Semiconductor goes sideways, or Taiwan Semiconductor can go up. If it stays sideways or stays under 217.50 or goes down, you're not going to have those called away from you. You just take your premium for the call you sold, and then you reload and do it all over again if that's what you want to do. If it goes up to the point that it hits the strike price and you don't otherwise close that contract or roll that contract out further, then you will get 5.4% for what it gets taken away from you, right? So the total return on this potentially with the call that's sold plus the return on the appreciation in the stock itself, if it's taken away from you at 217.50, is roughly about 5.8%. And this is its annualized. And just one thing I want to comment about the annual return. I'm not advocating that anybody's getting 211% a year doing this, right? You're going to have winners and losers on this, but yes, if you got 5.8% every single week or every 2 weeks, you're annualizing at this rate. But obviously, I'm not saying I'm doing that, or anybody that my investment partner or what have you, anybody's doing that. It's just that's what the potential is. UAL, so that's another new ad, right? United. It's at 101, so you can get your 100 shares for a little over 10,000. Expiration date of the 3rd, a week from Friday. Have the strike price at 107, so it can get taken away from you at 107. You can get 65 cents, or which basically times 100 is $65 for that. That gives you a 60 bip or a 0.60% return just on what you're getting paid for selling the call contract. And if it were to get taken away from you, you're getting the price appreciation on the stock itself. So there's some good numbers there. The numbers from here start to get more, what's the word, pedestrian. I mean, well, actually, I stand corrected on that. Hold on, let me take the Hood is probably, just based on this 1.3, is probably your best deal out there right now. And then it gets a little less. The returns are not as promising. So Hood is a 13, to call it a $40 stock. So you can buy 100, 200, 300, depending on the size of your portfolio. You can buy a few hundred shares, maybe, and then sell 1, 2, 3 option contracts against that. But in any case, if you sold the January 3rd contract call at the strike of 42, you're going to get 52 cents or $52, which is on that alone a 1.3% return for a week from Friday. Really good. So that's probably the best value out there, and that's speaking for price of the stock. That's the most reasonable priced one. So for most investors. So if you get taken away from you, it's at 6.1%. That you're getting on the stock itself, plus the 1.3% is a 7.5% return if that all happens. So there's probably the best deal for January 3rd, and then it goes on and so forth from there. And then finally, if you push out one more week to January 10, so that's 2 weeks from this Friday, 5, 6, 7, 8, 9, 10, roughly about 11 trading days. Obviously, there's a lot more value out there. So if you take United Airlines at $100, $101, and you sell the January 10th contract call, you sell the call, January 10th contract, sell the strike of $107, you're going to get $2.05 per, which is $20, excuse me, $205, sorry, do my math, $205 for that contract, which is a 2.1% return in that time frame, just on selling the call alone. If it gets taken away from you at 107, you also get the price appreciation number right here, 5.7. So this has good value right at the 2.1 for that time frame. Taiwan Semiconductor, it's at 206, sell to 217.50. You're going to get $203 on one contract for every 100 shares. So one option contract representing 100 shares, $203. That's a 1% return. And then there's a couple of the good values here with United Airlines again. If you instead of the 107 contract, if you go out to the 108 contract, strike price, you're going to get $177. 109, you're going to get $151. And finally, as far going down a little further, again, just to mention Hood one more time, $40 stock, sell January 10 contract call, 42 strike. You're going to get, what are we getting here? The bid's $1. I thought it was $4. Yeah, the bid's $1. So you're going to get $100 for that. And that's a 2.6% return just on the contract. And then you have the price appreciation if it gets taken away from you. If it doesn't get taken away from you, you do it all over again. You write another contract. All right, that's it for today. If you have any questions, or if you need to reach me, my email is mark@simplicittyiw.com. Thank you for your interest and thank you for your time. Please click subscribe on the channel. Appreciate you doing that. And once again, thank you. And remember, keeping things simple is really smart. All right, folks, Merry Christmas again, and have a good night. And if anybody doing trading, good luck with it on Thursday.